Hey there, real estate watchers. Andrew Finney here with some sizzling real estate news for you. Have you ever wondered how the youngest generation is cracking the homeownership code? Or if our brave veterans are leading the charge in the housing market? Stick around because we're diving deep into these topics and more, including the burning question on everyone's mind. Is the housing market going to crash? Let's get this real estate party started. In today's video, we're covering Gen Z's home buying strategies, veterans market confidence, shifting seller trends, and the hottest markets across the nation. Plus, we'll tackle that big crash question head on. For those new to my channel, I'm Andrew Finney, a seasoned real estate professional with over a decade of experience navigating the ups and downs of the national housing market. I've helped many buyers, sellers, and investors achieve their real estate goals. Let's dive into today's hot topics. Our top stories today. Gen Z is making waves in the housing market using some pretty creative strategies. Veterans are showing remarkable confidence in home buying, outpacing their civilian counterparts. We're seeing some interesting shifts in home seller activity across different metros. Zillow's market heat index is revealing which areas are the hottest for buyers and sellers. And of course, we'll address the million-dollar question, is the housing market headed for a crash? Let's kick things off with our main story, Gen Z's impressive entry into the housing market. These young go-getters born between the mid-1990s and early 2010s are proving that age is just a number when it comes to homeownership. Despite facing challenges like student loan debt and rising home prices, Gen Z buyers are getting creative and making it happen. So what's their secret sauce? First off, they're tech savvy and aren't afraid to use it. Many Gen Z buyers are leveraging social media platforms like TikTok and Instagram to find properties and connect with real estate professionals. They're also big fans of virtual tours and online mortgage pre-approvals, streamlining their home search process. But it's not just about the tech. Gen Z buyers are also thinking outside the box when it comes to financing. Many are exploring options like house hacking, buying a multi-unit property, living in one unit, and renting out the others, pooling resources with friends or siblings to co-buy a property, taking advantage of first-time homebuyer programs and down payment assistance. They're also not afraid to start small. Many Gen Z buyers are opting for condos or townhouses as their first homes, seeing them as a stepping stone to larger properties down the line. What's particularly impressive is their financial savvy. Many Gen Z buyers are prioritizing saving for a down payment early on, sometimes even before they finish college. They're also more likely to shop around for the best mortgage rates and terms, showing a level of financial literacy that's truly commendable. However, it's not all smooth sailing. Gen Z buyers are facing some unique challenges. Rising home prices and competition from older, more established buyers, the need to balance student loan payments with saving for a down payment, less established credit histories which can make securing a mortgage more challenging. Despite these hurdles, Gen Z's determination is paying off. According to recent data, the percentage of Gen Z homeowners is growing faster than many expected. This trend could have significant implications for the real estate market in the coming years as more Gen Z individuals reach prime home buying age. Real estate professionals, take note. If you're not already catering to this tech-savvy, financially conscious generation, it's time to adapt your strategies. Gen Z buyers value transparency, quick communication, and a strong online presence from their real estate partners. For those Gen Z viewers out there, kudos to you for jumping into the housing market. And for those still on the fence, remember, it's never too early to start planning for home ownership. Even small steps like improving your credit score or setting up a dedicated savings account can put you on the path to owning your own home. Now, let's zoom out and look at the national housing market picture. We're seeing some interesting trends that paint a complex but generally positive outlook. First up, let's talk inventory. According to recent data, the available inventory of unsold homes on the market expanded by about 1% this week. That's a healthy increase, but it's actually slower than the 1.5% rise we saw in the same week last year. Currently, there are 33% more homes on the market than a year ago, but that gap is narrowing from the 40% increases we saw in September. What does this mean for buyers and sellers? Well, it suggests that while inventory is growing, it's doing so at a more moderate pace than last year. This could indicate a more balanced market is on the horizon. Now, let's talk about new listings. We're seeing just over 60,000 listings hit the market each week, which is about 6% more than a year ago. When we factor in immediate sales, we're looking at about 70,000 new sellers each week, just 4% more than last year. The takeaway? There are more sellers nationally, but only slightly more. We're not seeing any signs of homeowners rushing to sell en masse. Interestingly, some metro areas are seeing more significant shifts in seller activity. Markets like Phoenix and Dallas are experiencing increased inventory, but there's no evidence of widespread panic selling by investors or home builders dumping their inventory. Now, let's touch on the Zillow Market Heat Index. This index measures demand and competition in different metro areas, and it's showing some fascinating trends. Currently, the hottest buyer markets include Miami, Florida, Jackson, Mississippi, and Austin, Texas. The hottest seller markets include Rochester, New York, San Jose, California, and Boston, Massachusetts. Factors like strong job markets and favorable local economic conditions are driving heat in certain areas. For buyers, this means doing your homework is more important than ever. The market dynamics can vary significantly from one metro to another, so understanding your local market is crucial. For sellers, it's a reminder that while the market is generally favorable, pricing strategy is key. Even in hot markets, overpricing can lead to longer days on market and potential price reductions. Lastly, let's address mortgage rates. They've been a hot topic lately, and for good reason. While rates have ticked up recently, they're still historically low. However, these rate fluctuations are having a noticeable impact on buyer behavior. We're seeing that every time mortgage rates rise, some home buyers are willing to wait for conditions to return to their favor. This wait and see approach is something both buyers and sellers should keep in mind as we move forward. Now, let's dive into some expert insights, particularly focusing on a group that's showing remarkable confidence in the housing market: are veterans and active duty service members. According to a recent survey by Veterans United Home Loans, a whopping 74% of the military population plans to buy a home in the next year. That's compared to 69% of civilians. This is a significant shift from last year when civilians were more bullish on home buying. So what's driving the confidence among our military buyers? A few key factors: economic optimism. Veterans and service members are showing higher levels of confidence in the overall economy. This optimism is translating directly into home buying readiness. Financial comfort. Despite higher interest rates and rising home prices, 48% of veterans and service members express comfort about their finances. That's slightly higher than their civilian counterparts. Home buying preparedness. Veterans and service members who are actively preparing for home ownership, meaning they plan to buy in the next 3 years, scored significantly higher on readiness metrics compared to civilians. VA loan benefits. While not explicitly mentioned in the survey, it's worth noting that the VA loan program offers significant benefits to eligible veterans and service members, including no down payment requirements and competitive interest rates. Chris Burke, Vice President of Mortgage Insight for Veterans United, attributes this confidence to stabilized levels of inflation. He states, "This growing confidence in the economy is translating directly into the housing market in communities across the country. This surge in military homebuyer confidence is particularly noteworthy given the current market conditions. It suggests that this group may be better positioned to navigate the challenges of today's housing market." For real estate professionals, this presents a unique opportunity. Understanding the specific needs and benefits available to military buyers could be a significant advantage in serving this motivated segment of the market. For veterans and active duty service members watching, this could be an excellent time to explore your home buying options. The VA loan program, combined with your apparent financial readiness, could put you in a strong position to achieve home ownership. And for civilian buyers, don't be discouraged. While veterans might have some additional advantages, many of the factors driving their confidence, like improved economic outlook and personal financial preparedness, are things you can work on too. It's all about being prepared and informed in your home buying journey. All right, it's time to address the elephant in the room. A question that's on many people's minds: is the housing market going to crash? This is a complex question, but based on the data we're seeing, a crash doesn't appear to be on the horizon. Here's why. Number one, controlled inventory growth. While inventory is increasing, it's doing so at a measured pace. We're not seeing the kind of inventory flood that typically precedes a crash. Number two, steady demand. Despite higher mortgage rates, we're still seeing strong buyer interest, especially among groups like Gen Z and veterans. No signs of panic selling. There's no evidence of widespread panic selling or investors dumping properties en masse. Number four, economic factors. While there are certainly economic challenges, we're not seeing the kind of widespread job losses or economic downturn that typically precede a housing crash. Number 5, stricter lending standards. Unlike the lead up to the 2008 crash, today's lending standards are much stricter, reducing the risk of widespread defaults. That said, it's important to note that the real estate markets are local. While we might not see a national crash, some local markets could experience more significant corrections than others. The key takeaway? Stay informed about your local market conditions, focus on your long-term home ownership goals, and make decisions based on your personal financial situation rather than trying to time the market. If you're finding value in this information, don't keep it to yourself. Share this video with a friend who's thinking about buying or selling a home. And hey, if you're watching on your phone, give that screen a little love tap, like, subscribe, and hit that notification bell to stay up to date with the latest real estate news and insights. Your engagement helps us reach more people with this valuable information. Let's do a recap of today's key points. Number 1, Gen Z buyers are creatively entering the housing market despite challenges. Number 2, veterans and service members are showing high confidence in home buying. Number 3, inventory is growing, but at a controlled pace. Number 4, some metro areas are seeing more seller activity than others. Number 5, while challenges exist, a housing market crash doesn't appear imminent based on current data. That's all for today, folks. Remember, whether you're a first-time Gen Z buyer, a veteran looking to use your VA loan benefits, or anyone in between, knowledge is power in real estate. Stay informed, stay prepared, and don't hesitate to reach out to a professional for guidance. Until next time, this is Andrew Finney wishing you an amazing day. Peace be with you.